Ever wondered what actually happens to your money after you deposit it into a bank? Most of us picture a giant vault, like in the movies, with piles of cash just sitting there. But that's not really how it works. If banks just stored our money, they wouldn't be the massive businesses they are today. So how do they actually make a profit? It's a fascinating system that powers our entire economy, and today, we're going to break it all down. Let's start with the most fundamental way banks make money. It's something called the re-spread. Imagine you deposit $100 into your savings account. The bank might pay you a small amount of interest, say 1% per year, as a thank you for letting them hold your money. So after a year, you'd have $101. Now, what does the bank do with your $100? They don't just let it sit there. They lend it out to someone else. Maybe someone needs a loan to start a business or buy a car. The bank charges that borrower a much higher interest rate, let's say 6%. At the end of the year, the borrower pays the bank back $106. The bank then gives you your $1 in interest and keeps the remaining $5. That $5 difference is the spread. It's the gap between the interest they pay out and the interest they bring in. When you multiply this simple process by millions of customers and billions of dollars, you can see how it becomes incredibly profitable. But here's where it gets even more interesting. Banks don't just lend out the exact money you deposited. They operate on a system called fractional reserve banking. This means they are only required to keep a small fraction of all customer deposits on hand as reserves. The exact percentage varies by country and regulations, but let's say it's 10%. If you deposit $1,000, the bank only needs to keep $100 in its vault. It can then lend out the other $900. The person who borrows that $900 will likely spend it, and that money will end up deposited in another bank. That second bank then keeps a fraction, say $90, and lends out the remaining $810. This process repeats over and over again. Your initial $1,000 deposit can actually create several $1,000s of new money flowing through the economy in the form of loans. It's like a ripple effect, and it's how banks multiply the money they have available to lend, which in turn multiplies their potential profit from the interest spread we talked about earlier. Of course, lending isn't their only trick. Banks have developed many other ways to generate revenue. Think about all those little fees: monthly account maintenance fees, overdraft fees, ATM withdrawal fees, wire transfer fees. They all add up. While each fee might seem small on its own, when you have millions of customers, it becomes a massive, stable source of income for the bank. Then there's the world of credit cards. When you use a credit card, the merchant you buy from has to pay a small percentage of your purchase to the bank as a transaction fee. But the real money comes from the high interest rates they charge if you don't pay your balance in full each month. Credit card interest rates are often much higher than those for other types of loans, making them a huge moneymaker. Finally, we have investment banking. This is a whole different side of the business. Large banks help companies raise money by issuing stocks and bonds. They advise on mergers and acquisitions, and they trade financial instruments like stocks, bonds, and currencies for their own profit. These activities can be extremely lucrative, though they also come with higher risks. So, when you put it all together, you see that banks aren't just safe places to store your cash. They are dynamic engines that use your deposits to create loans through fractional reserve banking, earn profits from the interest spread, collect a wide array of service fees, and engage in high-stakes investment activities. This entire system is what creates liquidity, allowing money to flow from those who have it to those who need it, fueling everything from small business growth to global trade. It's a complex but crucial part of our modern world. Thanks so much for watching. If you found this breakdown helpful, be sure to hit that like button and subscribe for more videos explaining how our world works. See you in the next one.